So finally, the inflation numbers are starting to come down. The media has said that not to worry, go back to our, normal ways of doing things. We're going to see prices continue to fall and get better. The economy is going to get better. We can go back to our normal lives. Or not. What's the truth? What's happening behind when you look at these numbers, the inflation numbers? What are they telling us about the economy, about what to expect? And are prices really coming down? We've got a couple of CPI reports that came out this week, which I'll go over. We had German CPI, the US CPI, and we had also PPI numbers that came out for the US as well. And also, we'll talk about the Chinese CPI and PPI as well and why that matters. Now, for those who are new here, my name is Daniel and I'm part of Infovest. Infovest is an organization that promotes and helps people to understand all macroeconomic news and how that ties in to the markets, looking at stocks, bonds, commodities, crypto, all these fancy products and whatnot. If you're interested in content like this, hit the subscribe button, the like button, and the bell icon to be notified on the next video. Now, let's start with CPI numbers and let's start with Chinese numbers, right? The Chinese CPI numbers came in worse than expected. The numbers came in deflationary. We saw that the numbers were negative, the month-over-month number, the year-over-year number as well, coming worse than expected, basically telling you that in China, we're seeing that inflation is deteriorating, not only deteriorating, but in a deflationary stance, and prices just continue to get worse off. Now, on top of that, we had German CPI that came out. German CPI came in as expected. The year-over-year number is 7.2%. That was the actual, and the expected was 7.2, and the month-over-month also in line with 0.4%. Not much of a change there. Now let's talk about the US CPI. The US CPI came in also month-over-month number 0.4% versus the expected 0.4, which is in line. The year-over-year number also, and I'm talking about here the core number that removes all the volatile numbers in the calculation. Year-over-year number comes in at 5.5% versus the expected of 5.5. So again, in line. Now, if you look at the headline number, also in line. However, the year-over-year number came in teeny bit slightly lower at 4.9% versus the expected of 5%. So great news, right? We came in a little bit lower than expected there. The other data points that are in line, which basically means no change in the CPI number, in inflation and prices, we can ignore that. Really? Can we really ignore that? Now, if you look into the report a little bit more, I'll read it here for you, but it basically says the index for shelter was the largest contributor to monthly all items increase, followed by an increase in the index for used cars and trucks and the index for gasoline. Now, we did see before this that the energy prices, crude oil did jump up on some headlines. If I take a look real quick at crude oil chart, if you remember back in March, end of March and into April, crude oil went from $75 a barrel and jumped basically all the way to $83 a barrel, right? And that happened temporarily. Now the crude oil prices have come back down, surpassed that jump, and actually sitting around $70 a barrel. So that kind of lifted and it was kind of expected that you would see some of the contributing numbers to higher inflation would be, like it says here, gasoline. But also, shelter went up. We saw trucks and used cars also go up higher than expected, right? So shelter meaning rent. Rent, picked up a bit there. That contributed to the number as well. Used cars, not the new cars, but the used cars also contributed to this as well. When you look at the new vehicles actually went down while the used cars and trucks went up and quite a bit for the month. That contributed to higher inflation, higher prices. So can this be a temporary glitch? What does this all mean, right? The thing is, being, in the summer months now, you're expected to see this. You're expected to see this, that certain areas, like for example, the real estate, the car, the automobile industry as well, start to pick up as people start to look around and are more active. And sure, you will get that little blip up in the markets. And I would call that more of a short term, a fake out that is happening right now until the real drop happens, right? We've been hearing a lot also about the automobile industry in big troubles, right? People who've taken on a lot of debt, auto loans, in trouble, getting their cars repossessed, but it's just not out there in the news as much as you would expect, right? And with this recession that's looming, with the potentials of more credit crunch to happen in the economy, we can expect, especially these numbers here in the report, to come in worse than expected. Just like how China is seeing their numbers, their CPI numbers, in the negatives, in the deflationary zone, we can expect the same thing in the US and in other areas as well. But before we get there, we need to see more deterioration in the demand and in the markets, in the economy as a whole. But right now, you're not seeing that. Right now, you're seeing a pickup, and you're seeing the pickup in the shelter, in the rent, in the automobiles, and so on. And that's giving kind of this fictitious, fake kind of feeling that, hey, things are okay, things are going to be okay, and let's buy and let's purchase right now these cars, and let's purchase or buy that house because, hey, look, the numbers have ticked up or the prices have ticked up, so things are fine. But that's not true. The recession in the economy, for it to deteriorate, doesn't happen in one shot. It takes its time. On average, from peak to bottom, it takes about 3 years for this to bottom out. Now, I don't have a crystal ball. I don't know when that date is. I don't know when it's going to come, when that time is going to come where the markets really drop and the prices really drop. But you can expect that, it is around the corner, and you can expect that prices to worsen off. Now, in terms of the media or anyone that's pumping that, hey, inflation is getting better, well, the numbers came in line. I don't know if you would say it is better. It's just saying that inflation is sticking around and it's still above the central bank's mandate. Remember, we did hear from the US Federal Reserve come out and say we need to get to the 2% target. We need to get to the 2% target. And I've been saying this many times. Check out my other videos on my channel as well, that the Fed and the central banks out there are going to come out and they're going to say things to try to bring pain to the businesses, pain to the consumers, in order to bring inflation down. I know that sounds crazy. I know that sounds dumb, whatever you want to say, but this is the signal. These are the signs that they're trying to do as much as they can to create that pain to bring inflation down. So you can start seeing CPI numbers the same way that China is seeing in their economy, right? So yes, inflation in some areas may be getting better, but not entirely when you look at this report. And in order for this to get better, we definitely need to see more deterioration in the demand. Now, are we in that deflationary process like the Fed has said? Well, the Fed has come out and said at the beginning of this year and even a little bit of last year that we have started the deflationary process. And then the Fed came out and said, hey, looking at the data, and the data tends to be lagging, by the way, looking at the data, we might be wrong again that, hey, inflation might stick longer than expected, which means what? That they can keep rates higher longer than expected if nothing breaks. They can create tightening conditions in the economy until something breaks, right? So until something breaks is when they would come in and start doing rate cuts. There's no reason on this report to be so optimistic about rate cuts or anything better to come. Is yes, in line. It did not go higher, but in line I wouldn't say is a perfect report. And even if inflation is coming down the same way China is, and in their numbers, then we can expect that if that happens in the Western countries, we can expect that something bigger is happening in the economy, some sort of deterioration, which may not be a really good thing with what the media is pumping out there. Now, another thing is another inflation report when you look at the producer price index, which looks at more of the commodities, right? The US PPI came in lower than expected, and some numbers a little bit in line. So it was an okay report. But when you look at Chinese PPI, definitely lower than expected, showing the signs of deflationary. And the oil prices that we're seeing right now, which are coming down, and the key important thing to monitor is these commodity prices. If they continue to drop and drop, it's hinting towards this deflationary process that the Fed started off with in the beginning of the year to finally come to light, to finally come into the economies in the Western world, because those commodities and those lower prices will trickle into the CPI report. Why is it not already? A lot of factors, a lot of other reasons, but the expectation is that we are headed towards, yes, lower inflation, deflationary process. However, it may not mean that that's the best thing for the economy, for the jobs, and what have you. And since the Federal Reserve and since the central banks are looking at lagging indicators and not the leading ones, and looking at these reports and making a decision on CPI, and they're always late to the game and always late to responding, I think it's a very likely scenario that they could keep things higher for longer and tighten things higher for longer based on these reports. And if these reports continue to be in line or don't really move the needle so much in terms of coming down lower, then sure, they can either hike rates or keep it higher for longer until they screw up and break something again, like they've done previously in history over and over and over again. So let me know what you guys think. Leave a comment below, subscribe, hit the like button as well, and the bell icon to be notified on the next video. And I'll see you guys around. Cheers. Bye.